This is actually an interesting question because we saw it in the I think consumable goods data that you wrote about this morning. Then I repurposed for the early look. But basically this boom in tech. What do you follow to predict the end of the pandemic-induced tech boom and where we are along the curve? Tech has thrived on the idea that with everyone at home, we have to be connected. This cannot be an endless process when the businesses they do business with are shutting down or slowing. I think there are, sort of two parts of this, but the one part is obviously that comps are going to get tough at some point for a lot of these companies. A lot of them have seen a lot of demand pull forward. There will be some secular change in how we work probably, but comps eventually on the micro quad level are going to get challenging for a lot of these companies.
Yeah, for sure.
It's a little hard to predict when demand gets tough or when comps get tough, because that on some level may be driven by where we are in the pandemic, what stimulus is, stuff like that. But I don't know if you have any thoughts on that.
Yeah, we got a preview of that last week. I mean, pretty much everything levered to work from home, including housing, got pancaked last week. So clearly, the market is going to underpay for those exposures, or at the bare minimum, get out of those exposures to rotate capital into the things that are likely to outperform on a quad two recovery. I think slide 75 in the macro deck is a slide that everybody should burn into their head. I mean, I think quite frankly, I think everyone watching this should print this out, print that slide out, screenshot the screen, print it out, frame it, put it on your wall, because I guarantee you at some point in the next decade, we're going to look at this slide and laugh out loud. This actually happened in financial markets. We let this happen. And obviously we were, long that from June to the highs of September, to the highs of early September, and we were happy to participate in that. But that doesn't mean it's got to be a perpetual reality. When we transition to quad two, this is something I've been discussing. If you go to look at slide 113 in the deck, slide 113 shows software as a proxy for the digital economy relative to real banks, to regional banks as a proxy for the real economy. The most important sort of lines you should be focusing on in this chart are the light blue, the dotted blue lines. The dotted blue lines display the quarterly expected value, which is the black bars in each of those quads, on a percentile basis relative to that asset class. And so what you can see is that digital economy is not going to get you paid in quads 1 and 2, whereas it gets you paid big time in quads 3 and 4. And it's quite the opposite for regional banks, but even more so for quad 2. So again, that if you're overweight that stuff, and obviously we're looking to buy dips and things like mega cap tech and momentum names, all the stuff that actually is working because of COVID, again, that has a leash. We don't know when that leash ends. That leash could, the quad 2 rotation could start next week on a blue wave. It could start in February once the comps really start to drop off. I don't know, but we're obviously working hard every day, every morning to get to those answers.